Investments in securities are subject to market risks. Read all related documents carefully before investing. Hello and welcome to the Weekend Investing Daily Byte. We are shooting this episode on 20th of June. And what a comeback the market made today after being down in the dump from 18 near 770 down to 18,670, and then a ferocious rally in the last few hours to go from near 18,670 to almost 18,830. So almost a 100-point drop and then a 150-point gain in the last 4 hours. So huge run up today as well. This today's move definitely suggests that market is not weak and that all weak hands that were shaking off yesterday have been taken care of, and the market is again now looking at a day where a new high will be made. So all the skepticism of yesterday and this morning has been taken care of, and the market looks like to be on a fair footing again. Tata Motors was leading the Nifty at plus 3%, along with Aisha Motors, Power Grid up 2.5%, HCL Tuck to 2.73%, HDFC Life up almost 3%. I think this heat map is not updated. Let me just I'll update this and put it in the description. I think there were some updation issues on that. IT stocks leading today's move at 0.8% up, autos at 0.7%, metals, PSEs, energy, everything up except pharma, FMCG, pharma, and some defensive stocks taking a rest, whereas the rally coming back in private banking also after yesterday, real estate also, energy stocks also. So a good day after yesterday, so that the week and the month is already now looking good. Mid caps came below yesterday's low but closed again higher. So the pattern of creating newer highs on a closing basis continues. Small caps another new high, 10,525, again a new high on a closing basis. And now since end of March, within 2.5 months, we have now traveled from 8,500 to 10,500, a good 25% gain on the index. And this is primarily the reason why Bank Nifty, which has been stuck in this range since the start of May, was testing, or one should say retesting, this bottom support at 43,400 for the fourth or fifth time. And that is where the spurt back came in Bank Nifty. So while it is not yet out of this range, but it has taken a major support here and bounced back. So very strong reversal in the markets today. Stock of the day, I think fertilizer and chemicals going up nearly 10% again. What we can see and observe from such charts is that usually a rally, a very strong rally with strong volumes, is followed by some continuation. It is usually not, you'll find it very rare that a rally just happened and volumes happened and then it just dropped dead. There is continuation once the volume picks up. And here, this was the first move up, then it kind of consolidated for the next 3 days after coming off a little bit, some profits taking off, and then today again it has taken off. So for traders, it is very essential to track, which are the big days with big volumes, and once those highs are taken out, the market tends to go forward. So fact and several other such stocks, doing well. So today's topic of discussion is selection of the fittest. What we mean by that is that this is actually the thesis of momentum investing, that by its own nature of how stocks are maintained in the portfolio and how stocks are dropped out of the portfolio only the fittest stocks remain in the portfolio. So let's say we have an absolute momentum strategy where stocks that are going up are being retained in the portfolio. Stocks that are coming down get thrown out. You either go to cash or pick some new stocks that are showing momentum. That is one part of it. In rotational momentum strategies where we don't go to cash but which rotate within that universe, you will have the highest momentum stocks always in your portfolio. So the least damaging stocks will always be in your portfolio, and that's how the fittest of the stocks are automatically selected. So when markets come down, you may be in cash or you may be in defensive stocks, but when the market starts to go up, those leaders of the new run, and every bull market has new leaders, those leaders of the new run automatically will appear as part of your portfolio when you are going to do the rebalance. So a lot of times, discretionary investing, the conventional investing, we are not able to pick the winners and leaders of the rally, because it is until very late till we look back and say, okay, this was the leader of this rally, and it's already up 300% or whatever. However, in momentum investing, that is not the case. The price movement of those stocks, the leaders itself, will differentiate themselves from others at a very early stage, and that's how those selections will happen in your portfolio. So the tweet that I did a few days back was that you don't need rocket science to find multi-baggers in your stocks, in your portfolio. If you just follow a process where you're selecting stocks based on strong momentum, then you post that you just have to let your winners run and cut your losers short. So any stock that is not satisfying the criteria for which you have the stocks in the portfolio, you will take out. All exit criterions, once they met, are taken out and replaced by others which will fill that space and try to take your portfolio up. So once you do this and the market is in a uptrend and a good bull run, you will find that multi-baggers will happen on their own. I mean, you really don't have to plan for it. You really don't know how many you will get, but it's not such a big deal. And over the last 6-7 years, we have seen so many multi-baggers come through weekend investing. 300%, 500%, 400%, 800%. Because you're allowing the stocks to run as much as they want to run. You're not cutting short their journey because you are feeling afraid of the height, or you are feeling afraid that the fundamental is not suiting the price, so on and so forth. So we allow the horse to run as much as it wants to run, and when it shows signs of stopping or slowing down, we get out of it. Right. So like a typical momentum strategy, right now, I've taken an example of MI35 that we have. A current distribution is like this: that 12 stocks have become multi-baggers, 12% stocks. 18% stocks are up 50% to 100%. 18% stocks are up 25% to 50%. 29% stocks are up 10% to 25%. 20% stocks are 0 to 10%, and only 3% stocks are down below 0%, or basically one stock out of 35. So what we're doing here is, as stocks are going up, all these 35, some of which are losing ground, we are taking them off and bringing new momentum stocks in it. And over a period of time, you are always holding almost all gainers at all points. This does not mean that we are not booking losses. We are booking several small losses, but we are allowing fewer but larger gainers to happen. So there may be, only 12% of the stocks become multi-baggers, but these 12% multi-baggers will make sure that they cover for a lot of the other stocks that may not be gaining. So the advantage here is that your weakness is getting removed on the go. You're not allowing the wound to go deeper. That pain to become severe. You're cutting it in the nip as soon as you're finding that this is not working for me, out of it, and getting new potential stocks to come in. So this is the whole concept of the survival of the fittest. For instance, some of the stocks I'll share with you here, like Mazagaon, Mazdoc stock is there. Now we entered somewhere in July, August 22, and it's up 262%. We are sitting on this stock. I mean, we are not worried, during this rally whether we should have gotten out or not, and our system kept it in place. So our exit strategy, the exit rules did not get it out in this fall, fortunately. And now we are witnessing another huge rally from 750 to 1300 in the last 3 or 4 weeks. So this is how multi-bagging is done. Now, even if it starts to fall at some point, our exit strategy will get hit and we will get out. Even if we get out at 1000 or 900, we still have made a good 300% on this. Another example could be RVNL, where we entered somewhere near 46 rupees again in April 22, and after that it went down to 30 rupees and kept languishing there for several months. We kept sitting on it. Then it went to 80 rupees, and then there was a zigzag here and trying to establish this base. Once this base was established, it went to 140 and it's doing a zigzag here. We are sitting on it. Once with exit rules may exit it, we will come out again. So this is how the distribution of the stock take place. So this is, for instance, many small losers. So between 0 and 30-40% is the loss, and this is the from 0 to 300% is the gain. And this is essentially over a period of time. You will have very few number of very large winners. So like you can count here: 1, 2, 3, 4, 5, 6, 7, 8, 9. About 9 stocks are, or maybe even more, 12 stocks are above 50% gainers. All these other dots are representing stocks that are between 0 and 50%. And then all these different ones are between 0 and 30-35%. So while the number of winners and number of losers may be the same, but the average winner is much larger than the average loser, and that when you put together, the maths will come around and finish that. So also to give you a sample of the biggest winners and biggest losers. So currently the biggest winners 267%, 166, 108, 101, 98, 74, so on and so forth. And the biggest losers are 39%, 31, 31, 29, 28. So you can see that's the quantum difference between what is the biggest gainer and what is the biggest loser. And when you average out all the gainers and the average losers, you find that the average gainer is much larger than the average loser, and the average number of wins and the average number of losses may be somewhat similar. So from that perspective, the insights here for all of you to take away is that determining multi-bagger is purely outcome of a rule-based process or pure luck by chance. I mean, you pick a stock and it becomes a multi-bagger. That is pure luck by chance. By design, if you want to do it, you will have to allow it to run. If you have a winner on your hand, you have to allow it to run. With markets nearing all-time highs, indicating strong upside momentum, check out Weekend Investing momentum strategies. You need to be in a momentum strategy to really get the gains out of a bull run and not be biased towards certain stocks, which may be fundamentally very sound, but which may not be participating right now, which may participate late, which may not participate at all, so on and so forth. And once you start doing momentum investing and you go through a full market cycle, full up, full down, full up, I mean, I can tell you with a lot of confidence that you will never go back to conventional investing. This is so simple, so straightforward, so logical, and a bit unconventional in terms of buying high and selling higher versus buying low and selling high. So once you are able to get your mind out of this hurdle that I'm okay if I'm buying a stock which has already run up a bit, that is where the key difference will come in your investing outcome. So thank you so much for watching this, and I wish you all the momentum in your investing. Thank you. Bye.